What's going on, everybody? Thanks so much for tuning back into the channel. I do want to apologize for the lack of videos this week. I had a really slow week. I only ended up making a total of 4 trades, one of them being a day trade, which I recapped in my last video, and the other 3 being swing trades. So I want to recap all these trades and go over with you guys how I actually ended the week breaking even. So like I said, guys, I only made a total of 4 trades this week. One of them is the day trade, which I recapped in my last video, and the other 3 are swing trades, which I want to go over right now. Just letting you guys know, this video will be a little bit longer because I want to do a more detailed explanation of how I do my technical analysis, how I enter a position, how I exit a position to cut losses, and so on. So I'll try to make it as quick as possible. So let's just go ahead and get right into it. First and foremost, I want to go over ticker symbol VICR. This I traded because it has an ongoing upward trend, which I'm very familiar with, which is the bounce off the 180-day EMA. And this right here is the 1-year, 2-hour chart. So what that means is that this entire chart represents the year, and every single candle is a representation of 2 hours. So every single candle, this is a 2-hour candle, this is 2 hours. So this is 2 hours worth of price action. So let me go ahead and show you guys the bigger picture again. So yeah, something that I'm really familiar with. And so what I was waiting for here is the bounce and then the break above the blue EMAs. So if you can see here, when it bounces, I wait for it to break above these blue EMAs. And so that serves as a confirmation of an uptrend. So one thing, taking a better look at it now, that I should have noticed beforehand is that it has several days of consolidation along the blue EMAs as it tries to break above them. So let's go ahead and take a closer look at the most recent bounce, which is right here. So like I said, it bounces off the 180-day EMA, consolidates as it breaks above the blue EMAs, and then has a couple of sell-offs during that process. But what I was looking at was upon the break of the blue EMAs, I was seeing that it was finding support along the blue EMAs, right? So this is the closer 10-day, 10-minute chart. So the red EMAs break above the blue EMAs, find support along them, support right here, and I was expecting support here. So it's making higher lows, so higher forms of support and higher forms of resistance, right? So I was hoping to buy here where I expected a support level and then to sell it just above the resistance for a quick gain of about 2.5 to 3%. So I wanted this to be a day trade originally, but that didn't happen, and it broke below these blue EMAs. So I actually took my positions. I sized up, taking 100 shares at 60.60, 100 shares at 60.40, and then another 100 shares at 60.30, which brought my average price to 60.43. And it sold off here. And one thing that I regret not taking the time to look for was a new form of support. So going back, it's clear here along this red line that this serves as a support level. Not even that, the support level slowly starts to rise because it's following this purple line, which is the 180-day EMA. So as you guys can tell, the biggest things that I use to do my technical analysis are the exponential moving average and different forms of that. So grouped exponential moving averages, which are the red EMAs and the blue EMAs, and then just the 180-day EMA alone. But yeah, so after this sell-off, so I originally got in here at 60.43 being my average price. I ended up selling because I saw that it was making a lower high, but that wasn't necessarily a representation of the end of the uptrend. It was just a form of consolidation. So by consolidation, I mean that the price action really isn't going anywhere, right? So it's still having the support here, It's starting to spike up a little bit and then selling off. So it's really staying in the same range. Nothing interesting is happening just yet. So I actually just cut my losses. I sold at the market open for a $212 loss, and just my luck, as it always happens to be, the next day it literally spiked up like 6%, I believe. Let's go ahead and check really quick. Yeah, 5.7%. So I could have made like $1,000 off of that trade, but I just cut my losses. And yeah, looking back, I could have done a better job of analyzing the stock and not being scared of this consolidation. But yeah, that's just how it goes. You win some, you lose some. So this served as a learning experience for me to, just do a better technical analysis and analyze how the price action is following the bounces. So as I just went over, after the bounce, it does have consolidation. So I should wait for that consolidation and buy during the consolidation instead of trying to predict the form of support. I should just let it ride, see how it reacts, and had it validated the support and then broken above the purple VWAP, then that would have been a positive sign. But yeah, taking a loss here, and then let's move on to PCMI. PCMI, very similar to VICR, so I'm not going to go over it that much. You can see here it's a similar chart, bouncing off the 180-day EMA, waiting for that confirmation, waiting for the crossover above the blue EMAs. So this one, I don't think I did a bad trade on. I just think the price action was a little bit unpredictable, and so I had to cut my losses quickly. So like I said, the same thing as the other one, finding support along the blue EMAs, trying to buy in during the support. So I took in an initial investment of, let's go to PCMI. Initial investment of 330 shares at 22.7, selling them at 21.9 for a loss of $264. So I bought it here at 22.7, and then I sold during this sell-off just because it was a very aggressive sell-off. It went down 4%. Yeah, it went down 4% in a day. So I just wanted to cut my losses quickly because it was being really volatile and fairly unpredictable at this point. So I didn't want to take a chance with it continuing to sell off. And actually today, which is Friday, the last day of the trading week, it sold off aggressively, but found a huge buyer here, which pushed it right back up. So that's a really bullish sign that this is likely to continue trading up. So I bought back in today, and let's go ahead and look at the 1 day, 1 minute chart. It had this small resistance here at 22.3. So I set an alert for once it broke above that, and I ended up buying back in at 22.35. I bought 550 shares, and let's go ahead and look at this. I made $247. So practically everything that I lost initially, I made back. And I plan on holding this stock for a little bit longer, a couple days longer, because now that I have a better entry near the bottom of the dip, I expect it to break above this resistance and continue to trail up towards this previous resistance of $25. So I'm just going to see how it moves this upcoming week. If it breaks below the blue EMAs, I don't really want to end up losing all of my profit. So I'll just sell, and then if I see that if it consolidates, find support, I'll buy back in. But I do find ticker symbol KEM and ticker symbol M more appealing right now. So M, which is Macy's, is actually the stock that I've been swing trading this week for the longest. So I initially took my position on Tuesday, and I bought in, so I bought in on the 28th. I bought 420 shares at 36.53. And this, same thing. Ongoing uptrend, right? Expecting support here. So one thing that I really like to see is that where you expect support. So in the bigger picture, this red line acts as the points where you expect for the candles to bounce off of and then start to trend back up. So what I like to see is during those points for it to already have its own independent form of support. So which we see here. Let's go ahead and look at the 30-day, 30-minute chart. Let me remove this line here. So this bold red line here serves as the support for this recent price action, right? And we see it here. So I originally bought here at 36.53 because it was looking like it was finally going to break above the blue EMAs. But again, buying in a little bit too early because I was trying to predict the movement rather than waiting for confirmation. So a small mistake like that cost me the opportunity for making several other trades because my capital was tied in with this stock. So it sold off aggressively the next day, but quickly found buyers and came right back up to the previous close. So it previously closed around this range and then it closed just about at the same range. So after that, it had about 2 days of consolidation, which was Thursday and Friday. And what I really liked seeing now is that it finally broke above the blue EMAs, which is what I was waiting for. And bouncing off the blue EMAs as they cross over and making new highs. So that's a really, really bullish sign there for me. Funny enough, I actually sold most of my position right where I bought it. And the reason being is because I see more potential in KEM, but I still kept a couple shares in Macy's. So I want to show you guys that. I kept, I think, 100 shares with Macy's, if I'm correct. Let's go ahead and look up here. Yeah, I kept 100 shares, pretty small position, but I definitely want to take advantage of like the uptrend that I expect to happen this upcoming week. And seeing as I already spent a week waiting for it, I might as well capitalize on it. But Macy's isn't as volatile as this next ticker that I'm going to show you guys. So the most that I expect to gap up in a week really is maybe 5%, in a day, maybe like 3%. Then it will consolidate, maybe even sell off a little bit and then start to gap up. So as you can see here, it gaps up aggressively, right? Oh, sorry, what's going on here? Whoa. There you go. There goes that laptop again, man, giving me issues. But yeah, gapping up 4%, which is really, really nice. But then the next day it sells off and finds buyers, and then it ends up closing at exactly the same price point that it closed at the previous day. So that's why I would just want to see the first aggressive push up, sell my position, whatever I have remaining, just lock in those profits and move on to something else, because this isn't a stock that's very volatile. So that's Macy's. And then I want to move on to the stock that I'm closing the week with, which is KEM. I took this position because, let's go ahead and show you guys the bigger picture first. It doesn't have a very clear price channel here, but one thing that I'm really liking is that it's forming a head and shoulders pattern, which is a very bullish chart pattern as well. Bullish meaning that I expect it to rise in price. So let me show you guys a visual illustration first of what that looks like. So this is a head and shoulders pattern. This is the neckline, and then these are the shoulders, and then this is the head. So try to keep this image in your mind, and let's go ahead and go back to the chart. So as you can see here, this is the neckline here. Oh, excuse me, this is the neckline here. This is the neckline here. These are the shoulders here, and this is the head down here. This is the head down here. So what does that mean? What is a head and shoulders pattern, and why is it bullish? So essentially it's an inverse of the previous price action. So as you can see here, it finds support, finds resistance, sells off, right? So the same thing is going on this side, but it's a mirror image of what previously happened. So seeing as it sold off aggressively here in the past couple of weeks, we expect this stock to do the exact opposite and start to trend back up to its previous resistance of 29.85, $29 to $30 range essentially, which seeing as where I bought it would be about a 15% gain, which is definitely very attractive. And the thing about this stock is that it's a lot more volatile than Macy's. Look at this right here. This is just one example. And one day it shot up 8%. So that's not to say that this upcoming week that it's going to shoot up the full 8%, 15%, right? It just has more of a chance of doing so. And so that's why I wanted to move a majority of my funds into this ticker. And taking a closer look as well at the 10-day, 10-minute chart. Let me show you guys the 30-day, 30-day, 10-minute chart. So when it breaks above the blue EMAs and finally the purple EMA, it's an indicator that it is likely to start trending up. Alongside the the chart pattern that we've identified, it's looking very bullish right now. So the red EMAs break above the blue EMAs. It's already found its first support as it broke above along the blue EMAs. So it's had a tiny sell-off, found its support along the blue EMAs, and is starting to trend back up. So it's looking very attractive right now. Really excited for the upcoming week. And that marks the end of this video. I hope you guys enjoyed it. I know it was a little bit longer. Tried my best to, explain how I take my position sizes and what I look for in terms of support, resistance, and EMA crossovers. So yeah, I hope you guys enjoyed the video. Have a great 3-day weekend, and I will see you guys next week on Tuesday.